No go.
All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 119. Episode 118 of Palantir Weekly is missing, and it might be posted next week because episode 118 is a special one, and we'll see what happens on that one. We got Matt joining us last minute. What's up, Matt?
So you can be a whole day late, but you can't wait an extra fucking minute for me. Got it.
Dude, literally, usually we
We're
start
good.
late. I could have waited more, but I was like, fuck it, we'll go live. And all right, so we got Matt, we got Amir, we
No,
got
this-
Vince.
No, it's
Arnie's here with me as well in person. I think you guys all know he was with me this entire week. He came to the United States. So
Why
we got
does
a lot
he
to
look
talk
so much
about.
better on your camera, though?
What do you say?
Not that Arnie ever looks bad, but he's look at this guy. I think he got filters on that camera guy.
Yeah, we got it. We're
I don't
making it
know.
look nice. It's a U.S. camera this time. It's not an Italian camera. We got a lot of stuff to talk about. Obviously, Palantir earnings were this week, and stock had an interesting reaction. Our boy PD Teal made some money this week, so we got to talk about that.
Unfortunately, not like us.
Not like us. Yeah, we did not make the money. And then we had a big expo that Arnie and I got to go to that was also pretty fun. So I think we'll start the conversation here. We'll get that one out of the way, and then we'll keep going from there. Arnie and I got to go to the SCSP AI Expo. Arnie, what was your reaction? I'll share some pictures on the screen. And what did you enjoy from learning about from the expo?
Well, broadly speaking, our expectations were positive because that was supposed to be a cool event. The very first AI Expo targeted for government. So is there a better place where Palantir can shine? And Palantir was not a random participant. Palantir was the key sponsor, the company essentially organizing the event. So it was a very unique opportunity not only to know more about the company, but we had some peculiar shots, like a little carp having fun with little Amit's hair.
Amir's hair. Amit, your sister, she cracks me up. My God, it's so funny that she's like, "Is that someone from Palantir?" And then don't post this on Twitter.
Dude, it was a pretty crazy event. So basically they invited us to just take pictures, basically like media, you know. And I think Palantir's starting to leverage the retail investor base a bit more, right? And tapping into the retail investor base. So they invited me and Arnie. We got to go there. The guy who hooked us up, Iliano, basically was like, "Look, we can't promise you're going to get to meet anybody, but you know, we're happy to have you here." And so we were like, "All right, let's just go." And then you know, it beat our wildest expectations. Sham ended up talking with us for a bit, right? Got to answer some of our questions. We got to meet a ton of these engineers that are forward deployed on the AIP product. We got to get a much more technical understanding of what AIP really is. And then we got to see Carp, who gave a nice little talk, and he came up to me and Arnie after the talk and shook our hand and basically was like, "We really appreciate you guys. Thank you for doing everything you're doing." And so it was really cool. So I think they tapped into the retail investor base. Very fun to see them at the event. They had the biggest booth at the event, and at these big expos, a lot of these companies are presenting like literal PowerPoints of like their new AI product. Palantir is literally having the mixed reality headset they can put on, and so the mini boot camp they were leading at the booth itself was just night and day against the other companies that were presenting. So
I would say already the fact that the product was there and the employees allowed us to see the product, how it is actually deployed. Obviously, they were demo data, but the product was there. It was not a presentation of a potential product that could emerge, and the product, how it is effectively used into SkyKit, or even more cooler, with the mixed reality headsets. So they had this set of 5 Meta, how's called the Oculus glasses, with the Palantir platform for mixed reality. So the control panel, which allowed us to see essentially the battlefield from the glasses displayed there, where there was a table with all the ships moving around, the planes. And the idea with that is having a clear sense of what we have is happening in the battlefield. Because with that clear understanding, you can make decisions.
yeah. And so overall, I think the event was really awesome. I think they crushed the event. They did a good job. Hopefully They got some new potential customers that tried out some of their products, and it was the day after earnings, and they crushed earnings, which we're about to talk about, even if the stock didn't necessarily reflect that. Cool. So let's get into earnings. Lots to break down in the numbers, but I think we'll start off with raw thoughts. Vince, give me your raw take on earnings. Then we'll go to Matt and Amir, and then we'll get numbers by numbers.
I mean, I was very happy with earnings, despite my call options were not so happy because I didn't sell them on the day when Amit told me I should sell them. And pretty much everybody told me I should sell them. I think what was really good about this earnings is that if you look at all the backward looking indicators, they were looking pretty okay. So by backward looking indicator, I mean, like US commercial revenue, all the revenue numbers, they're all looking backward. And then you have all the forward looking indicators, which is, deals closed, total contract value, customer count. Because, when the customers are growing, then we know that there's revenue coming down the line. And all those indicators, they were effing great. I don't want to use another language, but it was on a whole other level. So you know that there's many new better quarters coming. I don't know what happened to the street. Why I guess because it ran up so much on the day of the earnings. I think this correction, I don't get why it's happening. I'm a very happy shareholder and not thinking about selling.
Okay, Amir, your raw thoughts on the earnings. Just again, try to keep it to like 1 or 2 minutes, and then we'll get numbers by numbers. But what were your raw thoughts?
Overall, I would say that it was in line with expectations. Some good, some bad. I'm sure we will get into those in more detail. The best part was the commentary around the earnings, seeing or hearing Carp and the team speak during the conference call was the biggest positive takeaway from me, because that's where we actually listen for any hints of what the future may bring, because we know that what they're doing now isn't really too relevant. The quarter by quarter, the bigger thing to look out for is the bigger picture. So all the commentary we get, I was really positively surprised on that. But the numbers, it's a mixed bag in terms of the actual financial performance for me. Also, I don't know if it's related to the earnings or not, if we will talk about it, but the AIP signups was really quite shocking.
To the upside or the downside?
No, that's what I was hoping we could discuss shortly after. Okay. But yeah, those are my raw thoughts.
Okay, Matt, how did you think earnings went?
I thought they went swimmingly. The fact that we went over 20% year-over-year growth, I thought was something that was rather spectacular. They got it for 16.5%, 17.5%. I think the only thing that surprised me slightly, which I think I was biased from the fourth quarter earnings, was the cash flow margin kind of dipped, but I think it was still way above where we were over, say, the past 24 months. So can't complain too much with that. Overall, I want to dive a little bit deeper. I've been more focused on Rocket Lab and obviously flying up and doing this house flip this weekend, but eventually want to dive a little bit more in depth to the numbers themselves. But I think it's a steady state of continued contributions, right? And at the moment, the thing that surprises me is the continued reacceleration above 20% year over year. And I think that with that, we can really look towards what this company will be generating in terms of free cash flow when you say go out 5-10 years from now. If they're able to persist and generate even, say, 10% growth year over year, we're going to get to a point where this company is churning off a crap ton of cash, and we're already at $3.9 billion in cash. And really, I think the thing that I'm looking forward to is understanding what they're eventually going to do with this cash pile. I mean, it's only going to get worse as time persists. So I'm really just trying to understand what's next for that cash pile and if they're going to invest it prudently. And that could be the big next shoe to drop, and that what might, depending on what they do with it, could be the real big uplift on the stock. I'm hoping it has something to do with some sort of infrastructure or God knows what, but that's just my personal hope. But we'll see. But overall, good earnings for me. I didn't sell. The only thing I sold was covered calls, and both of those, even next week, I wrote some for $25, and those are up about 80%. The ones that I wrote for the expiring, I think I wrote 27s for expiry on Friday, May 10th, and those closed obviously expiring worthless. So cover call is always a good game.
I love it.
Palantir.
All right. Also, we forgot to mention, shout out to you and Vince. They run Rocket Lab weekly, and Arnie and I actually watched your podcast together on Thursday night. I think it was Thursday night. No, Wednesday night, where they had the CEO of Rocket Lab on the show, Peter Beck. So that was absolutely incredible. Matt and Vince are quite literally creating that community from scratch, and the fact that they got the CEO. We haven't even gotten the CEO of Palantir, and it's been almost 3 years. You guys got him in 30 weeks. So you guys are doing something right.
I'm pretty sure it has something to do with you.
I want to give a shout out to Vince.
Yeah, but how did that happen, Vince? How'd you get this guy? Tell us.
Yeah, I think the whole story is that like Amit did an interview with Vlad, and then I think some companies started to see that okay, like it's okay to interact with the retail community, and then more and more companies are reaching out, or I don't know. I'm trying to research this topic more.
Did they reach out to you, or did you reach out?
Yeah.
To them?
I got an email before. I got an email. What is it, like Saturday morning or Sunday morning, and it said, hi, my name is Morgan. Peter Beck has time for you at this time to speak about Q1 earnings. Like, do you want to do the interview?
Spam!
I literally thought it was spam, so I had to find this lady on Rocket Lab website. Okay, she really works there. It's a Rocket Lab email, and I was like, yes, of course.
Dude, I think, and Matt, I want to get your reaction to the pod, but I think the world is going and the trend is going to connecting with retail, because Rocket Lab has not pumped the way Robinhood is pumped, or even the way Palantir is pumped from the lows. So Peter Beck's choosing to do this, even when the sentiment really isn't the best, which I really respect him for, because he's not going to talk to you guys once the stock doubles. He's talking to you guys because you guys are talking about his stock before the stock hopefully doubles one day, right? Which is, I think it's a new trend that if you're smart as a CEO, you're going to tap into. I don't think it's cringe at all. It's cringe if you're like AMC and GameStop, because the companies are fucking stupid. Rocket Lab is not a stupid company. That's something you really want to talk to the retail community. Matt, what was your thoughts on getting him on the pod?
Well, first and foremost, I want to thank Vince, because he obviously got the email to come onto his channel, and he was selfless enough to bring me on as a co-host for that. And so it's great to have the opportunity to talk to Peter, who I've been following now since 2020, 2021 time. So about the same time, maybe a little bit less than Palantir, but somewhat similar. So I really thank Vince for that opportunity, because it was really awesome. But with respect to it, I think adding a little bit of color, Vince and I talked a little bit afterwards about how strategic he is, Peter Beck meaning, and then also just the piece that you were talking about there, Amit. I think we talked about it afterwards, Vince. You were saying like, okay, well, if a couple thousand viewers and have this many shares, I mean, we were talking about somewhere close to about 5% or something of the company's sort of shareholder base, or even like a couple percentage points if you start to stack it on top of each other. So it wasn't anything sort of small. It was a couple million shares for sure. And when you only have 495 million shares outstanding, that ends up being a pretty substantial ownership percentage, right? And I think the problem that Rocket Lab has right now is, and I don't want to make this Rocket Lab Weekly or anything, we did one earlier, check it out on Vince's channel, but all stock prices is supply demand. And so if you have more people buying the stock and you have less people selling the stock, eventually you're going to get that bottom support. And Palantir had that in the 6s, and it took a lot of effort, and the retail community kind of back it, and it's only been upwards since that. Robinhood had the same, and I'm hoping Rocket Lab eventually follows.
I love it. Awesome stuff, man. We're all trying to do some cool stuff here on the internet as some regular guys. So really, really fun stuff. All right, let's discuss Palantir. So in terms of the actual earnings themselves, I think I want to start off with you, Amir. I'm going to pull up the slide deck, and I'm just going to lead this on the to start. This is their top level overview. You can direct me if there's any numbers you really want to discuss or any slides you really want to look at. But I mean, given these numbers, which are pretty good, the street definitely upgraded all price targets across the board, even though the stock fell 20%. We'll talk more about that later. But what were the problems you had, and what were the nice things you saw about earnings?
I don't know in terms of the slides, but I took some small notes. I guess they will tie into this more or less. You want the good or the bad first?
Let's do good. Get good out of the way, then we'll do bad.
Well, I was surprised to see that SBC as a percent of revenue finally fell below 20% for the first time. It's 19.8, but still, I was expecting that to actually increase. So that's positive. Customer acquisition cost went down again, continuing the trend. So 1 year ago, in Q1 23, customer acquisition cost was 5.85 million. Now it's less than half to 2.63. So AIP boot camps, it's really working. Like we're more than half customer acquisition costs over a 12-month period. The bad part of it is that the customers are paying so much less that the actual implied payback time, like how long does it take for a customer to pay itself off, has doubled since last quarter, or more than doubled. So it's over 20 months now, like more or less 2 years. But we also know that it's not the full truth, because usually customers scale up, so you can't really take it quarter by quarter. But still, really positive that customer acquisition cost went down further. Also, we talked about this last week, but US as a total percentage of the revenue mix has increased. So the story that Carp is portraying, that while the US is growing, the rest of the world needs to catch up, is actually starting to turn true. They went from 60 to 64% of the total revenue in 1 quarter. So that's good. Rule of 40 is still above 40, the way I calculate it, using free cash flow rather than adjusted EBIT margins, which they do themselves. So 2 quarters in a row now above 40, which is great. I don't like this one. I don't like using adjusted EBIT. But still, the way I calculate it as well is above 40, so that's great. Interest rate on cash is still high, but as Matt mentioned, it's going lower. So sooner or later, they will have to start doing something with their cash when they don't get the same type of yield. It's not about 5% anymore, which it was last quarter. So interesting to see what they will do with the cash. And then a few bad points. Gonna just quick fire through them. US commercial customer count growth actually slowed down quarter to quarter, which I was expecting it to really keep going up. So it went from 22% quarter-over-quarter growth in Q4 to 19%. So it's slowing down. We also don't have any 13F filing yet, so we don't know the exact details. But SPAC revenues as a percent of commercial increased, which is kind of shocking to me. We all thought that SPACs were behind us, but in Q3, SPACs made up 6% of commercial revenues. In Q4 of 23, it was 7%, and now it's 8% of commercial revenue. So that's kind of shocking, I guess, to all of us that pay attention to that. Actually, SPAC revenue increasing as a percent of commercial, it's not too positive, because it means that the rest is doing not as good as you would expect. Also, US commercial revenue is not really seeing the AIP effects. It's not really having this S curve yet. So it means that they're not really charging the way they probably should for AIP. And also, last point, UK is now less than 10% of revenues, which I was quite shocked to see. I think the commentary we've been getting out of the UK has been really positive the last few months. So I'm surprised to see that they dipped below 10% of revenue. So now we only have like 2 categories for revenue mix. It's US and rest of the world. Like before, we used to have like France, UK, everything broken out. Perhaps in the future we will get Japan as a separate post, but for now we lost UK, so only US and the rest of world. So those are some number commentaries from me.
You want to say anything?
You like numbers, don't you?
Yeah, I think it's easier to pay attention when I presented the charts like last time instead of just talking about them. So maybe it's hard to grasp what I'm talking about. I do have the charts for everything, but maybe we can let someone else talk and then maybe revisit some charts.
Well, I would present this comparison to help us focus a little bit, because what we noticed is now all the attention is on US commercial, which is the fastest growing and the one that theoretically could really uplift all the revenue group. Last quarter, we were excited for the 70% year-on-year growth, but we already discussed before the earnings that 70% was a bit too high. It was anomalous because it was calculated from a dip, but the normal growth rate should have been around 40%. Still excellent, but obviously less shiny than a 70% year-on-year. But we have a nice comparison we can make between what happened during last quarter and this quarter. So I need to press share. Okay, so this quarter, rather than 70% growth, we got 40% growth, confirming that that's the normal growth rate. But there's a but, because if we exclude the SPACs, actually this was closer to 70% according to the earnings call. And as Vince said, I think there are two dimensions. There is the dimension of the past and the dimension of the future. The dimension of the past is already great. 40% growth year on year. In the call, they said closer to 70% year on year, excluding the SPACs. Great. But what about the forward-looking metrics? And here is where things started to become really interesting, because we have 70% year-on-year on the customer count. We see that the customer count keeps growing much more than the revenues. Essentially, they are creating the seeds that will generate fruits later. We have remaining deal value, which is 70% up year-on-year, meaning that the potential, like the budget of revenues that will gradually flow into revenues, has almost doubled. And then we have the deal closed in a quarter, which literally doubled. And the contract closed in terms of dollar amount, which more than doubled year on year. Essentially, yes, the revenues are growing 40%, but the conditions that allow these 40% to continue for a long period of time, or just to increase furthermore, is getting better and better. And a quick comparison with the last quarter, you see that, for instance, the remaining deal value went from plus 32% year on year, and they closed in the last quarter 300 million. This last quarter, we got a similar amount, which seems negative, but in reality, it is positive, because the big deal of the deals for enterprises are done in Q3, Q4. So having a relatively robust Q1 is actually a good sign. But more importantly, we get a 74% year-on-year remaining deal value, compared with, we mentioned, a 32% increase in deal value. This remaining deal value is revenues that in the future will become revenues.
Let's get some other thoughts. Matt, let's start with you on you can take it to whatever metric you want, but I want to ask you about
Wait, Tony. Remaining deal value isn't the same as RPO. It's not guaranteed revenues as RPO is.
Yeah, but it still went up. That's the point. I mean, I agree with you. It's not guaranteed. It's not remaining performance obligation.
Yeah, I'm just clearing that up for viewers that might have not caught that.
Okay, Matt, what did you think about the government revenue growth? Because that, let's talk about that. That accelerated, went from 11% to 16%. US went from 6% to 12%. Do you think the street's a little excited about the fact that government's accelerating?
I don't know. It's still technically a drag on revenue if you think about it in that perspective. But if you think about it, things are going in the right direction, right? Coupled with this, obviously Titan isn't necessarily included in this if you think about it, because Titan was just kind of awarded. So I think, this is a combination of all the things that have been coming up over the past year starting to bear fruit. And we've seen a lot of other deals continue to add on to that with renewed deals with the Army, Titan, etc. And so I'm comfortably confident that to accelerate versus maybe what we've seen over the past, say, 24 months, which is a deceleration. I could stop there, or I could chime in a little bit more about my thoughts about 1Q.
Yeah, go ahead. Keep going. Well, I could also I could set up the question like this, because I think everyone can participate.
First and foremost,
there's a little delay. Keep going. You're good. There's a little delay. You're good. Okay, we lost him. Did we lose him?
Okay. I just didn't want to speak over if there was a delay, but yeah. So apologies for the delay. The thought process that I have is that SPAC revenue only being 8%, 9%. I don't necessarily think it's such a bad thing. Like Amir, no offense, and also I just wanted to also correct Amir again. It's not the 13F that you were looking for. It's the 10Q, and the 10Q's been out since the 7th of May. So if you're looking for some further details, yep, it's been out since the 7th of May. You can check it out on the website.
The 13F filing is where they list all their SPAC holdings. There wasn't one last quarter because they.
Oh, okay. Sorry, I thought you were referring to specifically further details. I wasn't thinking about the SPAC piece.
For the details on holdings, just to clarify.
Yeah,
that's
my mistake. Yeah.
13F.
Okay, so other things that I think were very good to see. I think the
Did we lose him again?
Yo, Matt, what's wrong with your Wi-Fi, bro? Shit's fucked.
You should sue the Airbnb that you're staying at.
First to second quarter. Did I cut out?
Okay, you're good. You're good. Keep going. You're good.
Yeah, the deceleration from 22% to 19%, I don't think is that drastic if you compare the first quarter to the second quarter last year, which was about 4%, and then the second quarter to the third quarter of last year, which was 12%. So actually, it's still on a pretty good trend comparatively over the past trailing 12 months. And so I think if we continue in this direction, it'll continue to be really good. And then if you look at the past 3 years, as it's stated on that main page, you've had a 1,200% increase in U.S. customer growth over the past 3 years. I don't think that that's anything to really scoff at. And if you think about it and how Palantir really runs their revenue scheme, it's going to take 18 to 24 months before you actually see true revenue flowing through the actual bottom line and top line growth of the company. And so I think that is where you're starting to see this reacceleration of growth on a top line basis for Palantir. And it's obviously showing up in the adjusted cash flow of the company. If you think about it in this perspective, I think last year, this quarter, we made about 125 million in adjusted cash flow, adjusted income, operating income. This quarter, we're making about 226. So that's an increase of 80%. And I don't think you're going to see that slow down. 80% will slow down, but I guarantee this quarter, say a year from now, you'll be making easily over $300 million in adjusted operating income. And so I don't think it's going to be a slowdown of the company's sort of strength as we go forward. I think it's only going to be a continuation of what we've seen over the past 12 months, which is a strengthening of the balance sheet, a strengthening of the financial position, and the financial fortress that is Palantir.
Okay, let me ask this question to everybody. Vince, we'll start with you. We talked a lot about AIP bootcamps and conversions. These are the numbers: 42% year over year. We added 57 net new customers. It's up 11% quarter over quarter, and then commercial is up 14% quarter over quarter, 53% year over year. So Amir, or not Amir, first Vince, then Amir. Vince, or do you think the boot camps are these numbers good enough to make us feel the boot camps are really working?
So it's a very interesting question, because this is where I was wrong about my calls, is that I would have thought that they already see a much bigger conversion from the AIP bootcamps. So I think that to really get a sense of how well the AIP bootcamps are working, I think we need to wait a couple more quarters. We do know that Palantir expands with the customers. So it's like what we have been talking about for years, actually, on Palantir Weeklies, is that we need to figure out how to get customers in the door, and then the rest takes care of itself. Where I think we went a bit too bullish is like how fast that happens. So it's like, yes, now it's very easy to get customers through the door, but the time to spread through the company is still the same time. So I'm very happy with the customer numbers, but I think on the revenue numbers, more is to come.
Amir, are you happy with the customer count from the quarter?
Well, as I mentioned, I think we are seeing the AIP effects in the customer count growth. But making a 3-year comparison like Matt did from 22 customers and then saying it's 10x to now is not really material.
Well, it's what the company did, right? They put that in their
yeah, but I mean, we can't just go off of percentages. Of course, they're gonna frame it like it's the best thing ever, like the 70% last year. But I mean,
but still, I agree. But still,
that's from a 20 customer count.
I agree, but they did
comparison.
12. They did 12 exit regardless. I mean, I get
Yeah,
your point. But
yeah, but that's just when they started to actually go after commercial. So what we need to look at is other metrics and the more recent.
I use Palantir as a commercial customer since 2017. It's not the first time they started going after commercial.
Yeah, so you were one of 22 customers. That's
well,
great.
my thing is,
we can't gauge AIP effects using that metric, is what I'm saying. But
no, I agree with you. My only point is, they went public in 2020 as a relatively small commercial business and a major defense contractor. So, like, if we didn't see that 12x, what would you know what I'm saying? So I get that it's a small base, but at least we're at that level, because we have to grow in some capacity to be able to get the commercial business to
and we are seeing material growth. Can I share?
Yeah.
And you saw a 20% increase quarter over quarter, right? I mean, it's not like we're saying it went, and it slowed down, right? Over the past year alone, it's up 69%. I mean, that's nothing to scoff at.
No, it's definitely nothing to scoff at. But when you look at where the stock is trading and what's priced in versus what they're performing, that's where it becomes let's see. Can you guys see?
Yeah.
Okay. So here we actually see, I was really bullish in Q4. We started to see the AIP effects as of Q2. We started to really see an acceleration here. And I guess I was a bit disappointed in that it dipped and not like it bucked the trend. Is that the term you guys use in America? But still, it's good. But what we're not seeing from AIP is the actual, let's see, the revenue impacts. So it's accelerating, but we're not seeing this like S-curve type acceleration yet, which means that they're not really monetizing AIP yet. So that's neither bullish nor bearish. It's just that they are capturing market now, which is exactly what they said that they would be doing. But we still need to wait to see like what are the real AIP effects in terms of revenues. We're not really seeing the correlation between customer acquisition and commercial revenue. So I'm really curious about AIPNow, which is huge, because we've been talking for a long time. I think CodeStrap started it with like, we need a free trial. We know that the product is the best in class. We just need to get it into people's hands. They just need to try it. We need a developer community. So this is clearly a step into the right direction. But I'm really curious, how will it affect margins? Because they're offering compute for free, essentially, up to 500 per sign up. So the first $500 of compute is free. But I'm really worried because we don't know the conversion rates. It's open to everyone, right? So
Yeah,
we've
and
got
then
a lot of Palantir people which are not in a position to make a decision. They're not developers. They're just curious human beings like me or you could sign up and use compute for free. So I'm really curious, like, did they wait so long to do this because they didn't want to impact their gap profitability? Like, could that be a thing?
So we'll talk more about AIP now and the effects of that.
Oh,
Let's get
okay.
Yeah, let's
Sorry.
get Arnie's thoughts on the customer account, and then we'll go from there. Go ahead, Arnie.
Well, the big question is it the customer account changing enough in a way that these bootcamps actually are having impact? Because that's the question. I would say this is the proof that things are de facto accelerating. We were at an acquisition phase of around 30 customers per quarter. The last quarter, Q4, we got 45 new customers. And this last quarter, we got 57 customers, of which for around 40 from US commercial. And this is just the base under that will be monetized. There's another metric that, in my opinion, really shows how things are moving in that direction, because Palantir is not only growing now because it is hiring more people. Actually, 2% of the company left or was fired in Q1, but the revenues keep accelerating to a level that make Palantir actually the alpha SaaS software as a service company. Because if we look at the revenue per employee, something that was quoted also by Carp during the call, Palantir now has a revenue per employee of 700K per year, which is already way better than companies that theoretically should have this metric much more appealing. ServiceNow, which is 4x the size of Palantir, $400K revenue per employee. Salesforce, which is 10x Palantir, so theoretically this metric should be extremely higher than Palantir, only has $400K per employee. So we see from this picture below that apart from the SPAC moment that created a little bit of bias in the number, we see that this number has been increasing steadily, but in the last quarters, since essentially AIP, the bootcamps were launched, this number started exploding. Bootcamps are an effective way to grow, to really generate revenues from the existing employees without the need to hire a massive sales force like Salesforce, ServiceNow, Snowflake. And the beauty of it is that by having more revenues and not spending that much, you get the combination of the impossible. In the earnings call, when Carp was talking about the rule of 40, so the combination of revenue growth and margins, Palantir said, Carp said, we are doing the impossible because increasing the revenue while also expanding margins means that you are like defying the force of gravity. So to sum up, bootcamps are working. There are a lot of great signals that the customers are acquired faster. They're starting generating more revenues. Now, probably we just need to wait until that digestion fully happen. In the earnings call, Carpame said something that I think is worth underscoring. When they first launched Gotham, they tried to educate the market, and only a fraction of these customers actually were willing to pay for Gotham. But after a couple of years, then all the potential customers became customers after they saw some other competitors. They tried to do stuff on their own. So now with bootcamps, they're setting the standard. They know that they are so confident we can show what AIP can do. You don't trust us? Do you want to go Snowflake? Go Snowflake. In a couple of years, when your project will go nowhere, you realize, oh yeah, but Palantir was already able to do that a couple of years ago. Maybe we should give them a second chance. That is where all the vortex actually comes into play. So bottom line, I think the bootcamps are working. To fully see the effect is a matter of 1-2 years, but until the customer count keeps growing steady, while the margins stay high and potentially even higher, while the revenue keep accelerating, I would say there is nothing to worry about.
Yeah, just a question on it. I don't know, or to everyone. When you showed the slide on employee efficiency, basically revenue per employee, do you guys get a sense that Palantir got that from us? Because that's something that we've been talking about frequently.
No, I think every company does it. Robinhood did it too.
A lot of companies do
Did
that.
they?
Yeah.
Oh, okay. I haven't really noticed that in any of the companies that I track. So I was like, wait, what?
Well,
But,
on
okay.
SaaS, the rule of 40 is a sort of benchmark. They actually talked about the rule of 40 in the Q4 2021 when Palantir was really shining, like both in terms of growth and free cash flow margin. It was like an 80% rule of 40. That was something crazy. And the revenue per employee is something that was mentioned a bit, but never like fully discussed too much. And that's something that Carp underscored more than once this earnings call. So I studied many metrics of the SaaS industry, and I realized that that is the one that tells you a simple information, but that it really matters. The big tech are big tech because essentially with relatively few employees, they generate a shitstorm of revenues that then becomes free cash flow. The idea is they generate an increasing amount of money, but they don't need to hire many people. So the reference is the big tech have revenue per employees that is around 1 million, 2 million, now crazy numbers. But in the SaaS world, where the metric is very important, the biggest SaaS companies like ServiceNow, ServiceNow and Salesforce essentially don't have this explosive metric so shiny. Why? Because their business model requires a lot of salespeople.
Amir, go ahead.
Yeah, I was just gonna show this chart as well that we talked about last week. So you can basically ignore everything Q2 2022 and behind, because that is heavily skewed by the SPAC revenues. So basically, if we look onwards, we can see that the clear AIP impact is in the customer acquisition cost. Like they're finding a way to scale, which is what we've been wanting. So we can see clear impact here in the customer acquisition cost. And it keeps going down. The only slightly negative part is that the revenues are not keeping up as of Q1 24. Like we're not seeing the same revenue acceleration. That's why the implied payback time per client is increasing to 20 months. But that's beside the point. It's not really too important today how long it takes for a client to pay back. But the more important part is this, that we decreased the customer acquisition cost by more than half. I mean, we reduced it by more than half, which is like the real powerful AIP impact that we can clearly see here. So basically sales efficiency is going up a lot, which is like really impressive to see. And that the trend is not really budging. It keeps going down. So that's the real...
The corollary of this capability of acquiring new customers at relatively little amount means that if you have a lot of money that you can potentially spend and you find an effective way to actually spend it to leverage this powerful engine that you created, there you can really create a revenue acceleration. And guess what? We have 4 billion in banks.
Yeah, we do have 4 billion in cash in the bank. Vince, go ahead. Yep.
I just want to say that I see some comments, and I also thought the same, that they had 660 boot camps last quarter, but they had 87 customers from that, and people are asking what the F. And I remember a few Palantir weeklies ago, we were also trying to guess what is the conversion rate of the boot camps, and we were thinking that it's about 30%. And I do think that this has to do with the delay of customers coming to the boot camp, and then they have to go back home. They have to close the company, and they have to move through the management. So this is what I like. This is where I was wrong. That I thought that this cycle would be like a lot faster. So I think that there's like we will see in Q2 and Q3 and Q4, we will see customers that are coming from the original boot camps of last year's that are starting to show up in the revenue. So that's my opinion. I wonder what you guys think.
So one thing on that real quick, I think Dan Ives asked that question, right? And he was like, what's the conversion? And a lot of people thought Carp and the team were not answering the question clearly, which they weren't. They didn't give a 10, 20, 30%. But I think Lunar here has a good comment. Many bootcamp attendees are already Foundry clients. So are they still a bootcamp? Are they still a new customer, right? It's a little shady there. And then some same clients attend multiple bootcamps. Do they count as the same bootcamp, or do they count as a new bootcamp? It's a little different. I also think if they put that number out there, like if Carp said, yeah, we did 600 boot camps, we converted 10% of them, that's not a good number to give out, because what if that number goes to 30% next quarter? Or what if it goes to 8% next quarter because the quarter was not as good and it goes to 30% in Q4? So that's a number I think they should keep to themselves, because Snowflake shouldn't know that. You know, your competitor shouldn't know what the conversion rate of that is yet, especially because boot camps are still in their infancy. It's only been a year since the strategy has been deployed. This year it's starting to scale. And I think over the next coming quarters, when it really scales, we'll get that conversion rate and it'll be more obvious. But yeah, what did you guys think about their response to that question from Dan Ives?
But are you happy with like the 87 new customers from 660 bootcamps, or do you think that there's a lag, or
I mean, dude, it's better than them sitting trying to figure out sales, having their people stalk people on LinkedIn and make phone calls. Like, this seems to be. I was talking to a Palantir employee the other day who just got done from a boot camp. I mean, he's like, yeah, man, we're booting the camp. We're working. Like, we're getting shit done. They're trying to get more customers, you know? So
I would say that I'm satisfied. As we talked about, you can't really do like simple math like that. You need to recognize the revenue to recognize a client.
That's another part, yeah.
And these large companies, it's not like you attend and you go back like, okay, we need this, just pay for it now. We don't know what the billing cycle is like across every different customer. I mean, we can observe changes quarter to quarter, and we know that, like Arnie mentioned, that most are concentrated into Q3, Q4 for the billing cycles. That's why we see increases in cash flow, for example. But yeah, I mean, I think there are too many factors. I still think it's an impressive acceleration in customer count. I would like to know some color on the conversion rates or a gut feeling. So I would have liked Carp to answer that. I also felt like he dodged the question, but as Amit mentioned, I mean, there's reason to dodge the question, so I can't really blame him too
no
much.
Company really gives that information.
Yeah, exactly. Like, even though you want to know, like, it makes sense why they wouldn't.
What he should have done is whispered it into Amit's ear or Arnie's ear while you guys met him.
Yeah.
Well, the information that he gave us was just, we crushed it.
Okay, so
and I've learned to listen to Carp when he speaks, so interesting.
Let's do one more metric, and then I have a very interesting question I want to ask you guys. So adjusted operating income margin went up to 36%. That's pretty damn good. I mean, it's not easy to keep increasing that. Matt, any perspective on that thing going higher and higher for the business?
It's down a little bit if I remember correctly from last quarter, but
No, it's up.
no,
It's up.
actually, it's up.
Yeah.
Okay, maybe I'm thinking of adjusted free cash or something. But I'm just surprised because I thought it was kind of level off in the 25 to maybe the 30 range until by the time we got to 25, 2026. So the fact that we're even breaking into the 30s for me is impressive, and so it makes me think. I think that where I was thinking in the terms of the long term operating income percentage was going to get to was probably going to be to the 40-45% range, and it makes me want to reset for the long term to be closer to 50 to 55%. Just based off the fact that you're going to continue to be able to get past, right? And if you think about it from this perspective, what is really this operating income piece? It's basically taking what your revenue is and taking out your cost of goods. So that's what that gross margin is. And then taking the operating income is basically removing the sales and general administrative costs associated with it. So the fact that eventually, we're getting higher and higher in terms of the actual operating income from the company, and that's offsetting that drag from the sales and general administrative costs. This number should be getting closer and closer to that gross margin costs as we continue to increase revenues. So where it levels off at is a really good question. But to me, I think in previous years, I was trying to, I don't want to say artificially sandbag, but not necessarily understanding how well Palantir was going to be able to control their costs or their SG&A costs and really keep that flat, even though revenue is really doing well. Just makes me feel confident that we'll get into the 50% range rather easily in the long term associated with the operating income margin. So excited to see that progress forward.
I don't know how long they're going to keep reporting the adjusted operating income.
I had the same thought.
It's not really necessary anymore. And basically, the 36% is all accredited to employer payroll taxes related to SBC. It doubled quarter to quarter. So if you make it the same that it's been for the past 10 quarters, then it's the same margin as last quarter. So it's not really anything like some big change or something major happened. So it's just employer payroll taxes related to SBC that pushed the margin up from 34 to 36. So I don't know. This is not necessary anymore now that they're GAAP profitable. I guess it's an impressive number to report at. Report. So they will keep doing it. So it's basically just GAAP income from operations where they add back SBC and the taxes related to SBC. So it's not necessary to report on this anymore.
I think when they go to 50%, it's too good, and then they will stop reporting it.
Well, I'll be on the opposite side, and I personally appreciate this metric because that's the best intuition of the free cash flow power the company has. And I prefer it over free cash flow per se because the free cash flow is affected by the billing cycles. Let's say all the customers pay in Q4, you would see free cash flow at 0 for all 3 quarters, and then the entirety of the free cash flow in only 1 quarter. While with this metric, adjusted operating income, you have a sense of the free cash flow that is related only to the operations of that quarter. And since it is before SBC, it gives you a sense of the real free cash flow then that is generated at a cash level at the firm. Then obviously you also need to consider the stock-based compensation when you arrive to the net income, so that you as a shareholder actually how much value it is actually generated for you. But this metric has been skyrocketing now also with the help of bootcamps, because as we mentioned previously, bootcamps allow to generate revenues at a lower marginal cost, meaning margins. But there's a hint from the conference call where Ryan Taylor said, while we expect expenses to starting in to ramp starting in Q2 through the back half of the year, we made focus on calibrating expense growth below revenue growth for the full year in order to continue delivering our goals on profitability. So now the margins is at 36%. The management essentially hinted, okay, we are not focusing now on expanding margins even further, but that means that, to me, that they are really wanting now to deploy more marketing expenses to boost growth. And the Carp was, yes, happy for how things are unfolding, but he underscored, we realized that we are just scratching the surface into cracking the sales motion. So we have made very good progress, but we are really still far away from our full potential. So I think the best is yet to come here.
Okay, let's end it off on this. This is a really interesting question. We talked about pretty much every metric and the good and the bad from it. I do want to mention that the analysts all upgraded the stock. Even our boy Rishi went from $5 to $9. We got 25 from Tyler Radke. He was never a fan of us. Mariana still at 28, and
Mariana.
What's his name? Dan Ives at 35. Arnie and I also did get to meet Mariana at this event, and she's awesome. She's like super cool, and we just got to talk to her.
Is she as beautiful in real life as she
absolutely
is on? Okay.
She's more beautiful. She's funny. Her personality. We got to talk to her for like a good hour on this like rooftop, and she just told us about her life. Right. It was less about Palantir, more so about like what she does as an analyst. And she does a lot of work, dude. She's like constantly thinking about companies, kind of like us, but she's doing it from a institutional perspective, right? It's much more sophisticated for her in terms of every word she says has to be regulated.
Did
and all this
she disclose what other companies she really focuses on?
Well, she's publicly aerospace and defense, right? So the Boeings of the world, all those guys, that's where she spends most of her time.
Wait, I have a major question. Something that I forgot to mention, but something that I was equally disappointed in, is that we still only got 2 analyst questions on the call. Like, were you guys able to get any insights on that? Like, what's going on?
No. We asked her. So 2 things. We asked her, like, first of all, what the fuck what happened with her microphone for 3 quarters, and she was just like, I don't know. But like, she said the final. She said when the 4th quarter in a row, she had 10 people like on her mic, making sure the mic would work. Like, it was like a calculated plan to make the microphone work. Number 2, she said she's not in control of that. She's like, she wanted to even ask a follow-up, but like once they mute you, they mute you. So this is all Palantir and their orchestration of how the earnings calls go. If they wanted, if you guys remember 2021 Q4, they had like 7 analysts, and they had Jay from the retail investing community. He asked, that's when Karp was in that purple room when he was wearing the entire outfit. Like, they totally cut that down to like 2 questions. And I don't like it either. I think it's kind of annoying. Like, let there be 10 questions, make it an hour call, right? Like, versus 45 minutes and just 20 minutes of you guys talking.
Does she feel like the chosen one, that she's like the only one on an institutional level to be able to ask questions?
Like, I don't think
does she feel pressure that like, okay, I can't fuck this up, or just gonna take some
remember
questions like when dividend, and then move on?
Well, yeah, I mean, she's long the stock, so the question she asks has to be very important because that influences her research note. One thing she did tell us, though, is that we said, hey, what's the disparity between you and Morgan Stanley? Why is Morgan Stanley at like $7, $12, and you guys are at like 28? And her biggest thing was Morgan Stanley's thinking of it from a tech perspective. Bank of America, because of what she focuses on, is thinking of it from a defense perspective and tech. So from a tech perspective, you could clearly say the company's ridiculously overvalued. But when you add in defense, which is what all of her research, and if you guys read her research notes, I posted the latest one on Twitter a couple days ago. It talks about the fact that the government business could pop up a $200 million contract tomorrow, right? Theoretically. And how do you put that into the valuation model? The Morgan Stanley guys don't care about that, whereas Bank of America does, right?
And that is something you really need to have a specific expertise on in order to have a sense of what companies can grab very big contracts from the army. If you are just a tech analyst, you don't know what to look at. You don't know what are the key trends that are affecting the budgets of the DoD. You don't know how much money is going to be spent on why. So Mariana and the team is the only one who actually has this deep awareness of how also all these companies that they cover are related to Palantir, maybe also from a customer perspective, because Lockheed, for instance, is a customer, Babcock is a customer, and now we also know Anduril is a customer. Anduril is not listed, but is in the air. So there is much more than a pure tech analyst can understand.
Okay, so let's end it off with this question. AIPNow. So this is what I want to get back to, Amir. They opened up this thing while we were at the conference of this $500 free compute, and they had 400 signups. I think those signups got fully applied for, but it was a big deal. We asked Sham about it. He thought it was a big deal as well. I mean, basically developers get access to the product immediately, and I signed up right with my credit card. So I immediately, they theoretically, if I was using Foundry, they would start charging me. Here's my question to you guys. Let's say 1,000 people signed up for this in the next 90 days, right? And they expand it, and people are paying anywhere from $10 to $1,000 a month. Should Palantir count these as actual customers? Is my question. Because on initial thought, I think Wall Street will laugh at them in their fucking face if they said we added 500 customers and those 500 customers are paying $1,000 a month. Because given historically what their customers have paid, right? It would look very weird. I think their average revenue per customer would get very like floppy. Like it wouldn't make a lot of sense. However, the snowflakes of the world have 9,000 customers, but they segment them from 450 that are paying above $1 million to the other 9,000 that are basically, or the 8,000 that are paying, $20 a month, $30 a month, whatever. AWS, when I was using AWS, I would pay $30 a month for it. And there's some people paying hundreds of millions of dollars for AWS. So how do you think AIPNow expanding to people that are putting in their credit card, getting charged, which is literal revenue, that has to be counted as some type of revenue, are they counted as a customer? And do you think the company would be in the right position to say this is a legit customer that we're getting? We'll start with Vince and then we'll go.
I mean, every other SaaS company would count them as customers. And I guess this question comes from the chat that we had with CodeStrap, and I think that this is really important to CodeStrap, and he has been probably working on this for a long time. And I do think that it will make all the metrics very wonky, so that they do need to separate it out somehow, because both including them makes them wonky, and both not including them is leaving out a very important data for Wall Street, because what's going to happen with these customers, how do they scale, what's the spend going forward, what is the metrics on these people, because it can really grow into something very big if it goes well. And let's say that they don't just get 500, what if they get 3,000 or 4,000 signups, So it's very interesting how they break it out in the future.
Matt, your thoughts?
I don't necessarily know what the direct answer is going to be, but I would find it very difficult for Palantir to say, hey, we let a bunch of these folks kind of sign up for our software. We gave them $500 of free credit, and now they're considered a full-on customer. I think it'd probably be more prudent for the company to wait until that $500 credit is spent and then have a follow-on contract with whomever has signed up and whether they've expanded their services to that individual. And then they might be able to consider them a customer. My fear is if you sign up a bunch of people, say they try this AIPNow thing for 2 to 3 years, they sign up 20,000 people, and then they slowly drop off one by one due to just the fact of, hey, not all free trials are sticky, right? You might have a 10% retention rate. You're going to have this massive year-over-year decline in customer count. And so I unless they continue to think that maybe consumer individuals will continue to use AIP, and it's quite possible as well that this is on the forefront of another technological sort of software piece of their business that they're about to release. That I don't know, but I would find it very hard to believe specifically that they would assume that everybody that signed up at this conference is now considered a customer, because they've pretty much doubled their customer count overnight and got likelihood of very little revenue, let's just say, in the trailing or the upcoming 12 months. But I do think that this is something that is extremely valuable, kind of going back to what the real purpose of it is, because I think that there will be a very large year-over-year growth rate from that sort of cohort. If you think about it in this perspective, you're kind of allowing a bunch of people to kind of sign up for free. And then with that, I'm sure people will basically spend no money. But then on a monthly basis or annual basis in a year from now, they might be spending $500,000. But who's to say if people use the software appropriately as we'd expect, and as now you guys have tested and seen firsthand how valuable it is and how undescribable it is until you actually have it in your hands in front of you, which I want to hear you guys close out with, by the way, because it is your first time being in front of the product. You probably say, oh shit, I'm now thinking about data completely differently than how I've kind of taken it in as an individual for the past 20 years or 30 years of being some sort of analyst or computer scientist. I can now shape my business to be the most efficient, probable way to progress forward, and it unlocks a huge bunch of synergies. And you're more than willing to pay $1 million for two Palantir employees to help assist your business and shape your business. And I anticipate that that cohort of free trial will really expand rapidly. But unfortunately, you're against the powers of scale for large commercial customers that might start off with a $20 million contract.
Ramir?
Yeah, well, we don't know the implications here. So a builder getting familiar with the product and getting introduced to it on his spare time versus a large commercial client signing a major deal are complete separate things. So of course you need to segment this, but it also needs to be reported for us to get an understanding of what AIPNow is doing for us. And they already do segment revenues and client count in many ways. So it wouldn't be strange to do it for this as well. Like if we only get X amount of signups and not the revenue or client breakdown, it might just be like a few hundred emits signing up and using up their free trial. So like we need to get some sort of metrics on this. And also a question like, is this specifically for builders only, or can you onboard like smaller companies through AIPNow and like make it part of your ecosystem? Like I'm not too sure on that. And also what I'm really curious about is the margin impact this will have. $500 is peanuts in the conversation to give away for free. We don't know, like they might charge 500, but we don't know like the gross impact. Like how much does it cost them to offer $500 of compute in the platform? We don't know that. But if they keep letting people like Amit in that have no intention to sign up a major deal, then it might be a waste of money, you know. No, but yeah, I'm expecting us to get some breakdown, some information next quarter. How they do it, it will be interesting. If they do count them and not break it out, like the actual client count, it's going to be stupid. So yeah. We definitely need to get segmented results.
Nothing against you, Amir. I think everything that you said is valid. So there's no pushback that I'm giving here. But I think adding a little bit of color, I think what probably ends up happening at the end of the day is AWS will send Palantir a bill. Microsoft will send Palantir a bill. And so I assume these $500 charges is going to be minuscule comparatively to the existing revenue base at the moment, and will only be positive going forward. So I would say it's likely that AWS and Azure and Google Cloud send a bill and say, hey, you guys have to increase this month due to your usage. Yes, I understand that would probably say you do have some sort of cost if you think about it that way. But if you think about it, it's not like Palantir's over there being charged per sort of computing power, right? They have an annual contract likely signed up with these guys to make sure that they kind of have a steady stream of revenue coming through from the AWS and Azure standpoint, right? A lot of these guys like to sign up long-term contracts, so it's less variable and it's more predictable from that perspective. So I don't think that you really will get too much of a pushback from, say, the cloud providers that are providing a lot of this compute, because they probably know that with it will come much more potential revenue in the future, which in the long term would mean, you know, anyway. So I'm just saying, I doubt that you're going to see some large drag or something like this from an operating expenditure perspective, just based off of increased cloud usage. That's just my thought. I don't know.
Yeah, I'm not familiar with like billing from cloud providers, so thanks for the color there and providing some insight. But the reason I'm asking that is because why are we seeing it now and not earlier? Like, I understand that AIPNow is AIP itself is a more like easy to swallow product compared to like a Foundry stack, but we know that CodeStrap and others have been like crying for, yelling for this and asking for this for a long time. So we know that they recently relatively turned GAAP profitable. Could it be that they didn't offer this sooner because they didn't want to impact that cycle? Like, I don't know. Like, as you said, it could be completely immaterial to them to offer X amount of credit for free, but we don't like know the breakdown on that. So that's just my question. Could it be that they offer it now because they're stable enough and it's relatively small part that wouldn't make them not GAAP profitable? That's the reasoning behind the question itself.
Well, I would not reach too far, and I would try to stay as practical as we can. Now, what does it really matter if now the customer is increased? Well, yes, but it really depends at the end of the day of how the company wants to allocate that customer, like how to display that information. And it can easily do it like Snowflake. Okay, total clients above 100K, 1 million, just to segment. So that's nothing difficult to do. It would just create another slide. So, I mean, that's not a problem. If it doesn't create a good picture, people will complain, and the next following earnings they will need to adjust. But let's look at what is the core information here. What really matters is Palantir is showing finally the willingness to opening up to be tested by builders. Because the big problem so far is unless you are someone who already works at a company that uses Palantir, even if you want to do something with Palantir, you can't really do that. And as CodeStrap shared in his tweet, like 80-90% of the people who use AWS are tiny users. There is only a very, very small percentage of users that are actually big companies, enterprise companies, like less than 5%. Obviously, they derive a big chunk of the total revenues, since these few clients are actually big. But in terms of users, there's a big disconnect. Like the big chunk of people who build stuff on AWS are very small. And Palantir has the product. I think Palantir feels that finally they have a product that can make builders, so developers, really excited to build stuff, have fun with that, and then create more and more complicated stuff that potentially they could sell. So this opening up you can access with credit card, I think is just the very first test they do to see how can we try to scale really all we do to a very broad audience. And since, as we mentioned previously, they have 4 billion in cash, that ensures that if they want to do like a wild bet, they can potentially do that. This 400, 500 opportunity for developers to sign in, developers and people like us, is just a test for them to see, okay, does the infrastructure truly works? Are people actually interested into doing something like that? Because according with this information, then Palantir can say, okay, now let's roll other 1K customers. Let's roll other 5K customers. Essentially doing what Robinhood is doing with the credit card. They know they have a high demand, but they don't wake up one day, okay, credit card for everyone. No, this is a very difficult move, very critical move for the company, and they need to be sure that they roll out in the right way, in the right time. And if it works, this is something that can really shape the growth curve for the coming years. This combined with bootcamps. So the idea potentially could be you have Palantir employees bootcamping all days with the biggest potential customers, and you have on the other side the smallest potential customers that essentially onboard themselves just because they're interested. They can go and explore with AIP. So overall, I'm very happy for the signal that they showed by, okay, we try finally what Costrap has been saying to us for 4 years. We try to give you the access with a credit card, and then we will see. Like if Palantir will start pushing more and more these initiatives, we will have a signal that there is high demand. If it disappeared in 3-6 months, we don't see anything related to this, that could be a bad signal.
I think it's gonna be interesting. I definitely think the AIPNow customer account is going to be a type of customer account. The question is, how do they represent it? I probably think they're gonna have to segment it in some capacity, but I also agree with Arnie. They're gonna have to roll this out slowly to be able to scale in cohorts, which is the right way to do it. But the fact that they got this out of the way and you could sign up and actually start playing with it and using it, it was a big deal for someone like me to have immediate access to it. I think we'll end off on Arnie and I and the demos that we saw as well. My perspective on this is I asked every employee that showed me a demo one main question, which is, what is AIP's advantage over just the models, and are the models kind of commoditized? And I think I already know the answer to this. We all kind of know the answer to this. But what the employee said from their perspective is that AIP logic is what connects these models to the contextual reality of the business, which is the ontology. And I got to like kind of play around and see that ontology happen in real time. One of the employees was coding certain functions in the ontology to make AIPNow's recommended simulations of how to resolve a certain task they were showing us from a supply chain perspective, like in real time. And so from that perspective, it was AIP being connected to the ontology. And that was where the value is. And I think we all know that. But when we asked them, what do you guys think about the models? They were like, look, we can switch between models right here, but the models aren't that exciting. You know, the models aren't like, they're great, they're awesome, more models. But connecting to your ontology seems to be the core thesis for what Palantir is trying to go after. What did you think of the actual demos we saw?
I mean, at the end of the day, we really had the experience. If you click ChatGPT or you click Llama to deliver an output as a user, it doesn't really matter to you. As a user, what really matters to you is, do I understand what I'm doing? Do I actually improve what I'm doing by leveraging these models, which can be easily accessed with just imagine when you tag someone on X, you can essentially query the LLM to do something with the same simplicity. Neither you need to actually open the chat tab. You can do it directly from the picture. You like click and start giving a command to the LLM. And I confirm all the employees confirmed what we were thinking, which is these models, yes, are exciting, but it is truly how you can deploy these models into delivering something that truly matters. And we got some demos which were defense oriented. So it was a lot of monitoring to understand what was going on. When there's an anomaly, where's a vessel, and you need to quickly identify, okay, is this vessel a potential enemy? Because it is going into a route that is anomalous. So how can I actually deploy the information I could have in order to assess, okay, is this an enemy? Is this a threat? What should I do with it? And with LLMs, you can deploy a lot of models very simply to have the information, like you triangulate the information very quickly to then report that information. And this is what employees told us, but we even had the opportunity to speak with someone else to talk deeper. Actually, we asked directly this question is, we have the feeling that these LLM models are already a commodity, but why Palantir is doing this peculiar approach of building the infrastructure? What's the advantage? So when we will know more about this?
Yeah, probably next week when we release this podcast with Sham, he'll talk more about that. In terms of the mixed reality, that was pretty cool. We were in this demo where we were like communicating with Taiwanese officials, obviously in some hypothetical reality about what would be happening in China, and we could see what's happening connected to the ontology data pipeline, and someone else wearing the headset across the world could also see this exact same thing we're seeing. So mixed reality was super cool. I think there's no I think the consumer use case for the Vision Pro is stupid, quite frankly. I think no one's really going to use it in 10 years. I think the enterprise use case or the defense use case for a Vision Pro or a Meta Quest is going to be like tens of billions of dollars. So
what that mixed reality headset gave, why that gave you the impression this is dope? Like what a real important case they solve?
I guess from a defense perspective, what the guy who was demoing it for us described was like in real time, if you can see everything that you need to see connected via the software on the headset itself, you can make decisions by like touching at things, talking into the headset, and someone across the world who's wearing the same headset connected through the interoperability of the same software, which is kind of like the moat of the software, can make decisions as quickly as well. So instead of having to press buttons here and there on a computer screen, you're seeing things in real time. And then maybe you're telling someone to press the buttons, but you're like the milliseconds of speed you have on the quickness by having an actual spatial computing view of the world and of the software that they're showing you, I think is what is exciting there. Especially, I mean, this demo they were showing us were like these Chinese ships coming for Taiwan, and like you have to make real quick decisions right there. That's where it seemed like it's going to be pretty cool in the future.
So can I ask a follow-up question?
Yeah.
So you guys now have been covering Palantir for about 2.5 years, right? And doing as much research in depth as you can. This is your true first experience hands-on with a lot of this software. How is that compared, that hands-on experience compared to the research that you guys have done over the past 2.5 years? And has it connected a lot of those dots that you guys might have felt unfulfilled or kind of uncertain to you? And now do you have more conviction or less conviction based off of that research that you've done over the past 2.5 years with now finally using the product?
At least for me, the one thing that I saw in the demos, so at high level, I knew what an ontology was and what it connects and how AIP connects an ontology. I saw at least 3 demos, one in supply chain, one in defense, and I think one in energy, showing a use case of connecting ontology or connecting like data in the ontology to some type of command function via AIP. And so that was the cool thing for me, is like seeing that happen all in real time in my face. And it took the hypothetical, abstract, high level research of what does that mean conceptually that the software does, and I'm seeing it in real time in terms of solving like a shortage that they had on one of the parts that they were trying to resolve in the supply chain demo. And I was like, this seems to make a lot of sense, and I get why they're selling 500 million of this stuff every quarter. And it does seem like that ontology, which is what Karp talked about on the Q1 call, that is why AIP can't be replicated, because the only way for AIP to matter is if you have the ontology, and that's the thing they spent 20 years working on.
On a similar line, what I was thinking is we all know that the more you go on YouTube, the more the algo knows you. And I got that feeling. The more you use the platform, the more, thanks to the ontology learns more about the users, the business itself, the government itself. Therefore,
relationships. Yep.
When it comes to, okay, I need to make a new decision, that is all the background information. So the knowledge of the previous decisions, what went right, what went wrong, that gradually becomes better and better. So you start maybe in a raw setting, but the idea of connecting the ontology with the operations and an LLM is to essentially facilitate this feedback loop and making it faster and faster. Because once you have a structure and you start making decisions, this decision then will follow and fuel further decisions. It means that you will make many more decisions. The more decisions you make, the more data also is available, the more the ontology can feed itself and help you make better decisions. So I really saw like materializing what we were discussing for long, that every problem is a data problem. Since it is a data problem, it can be solved by making the right steps. And by seeing the demos, I connected really this intuition that with the ontology, you can make better decisions because all your choices, how you come out to a decision, then this stuff informs the LLM to help you do the next one decision.
Yep.
So that's how you create an advantage.
And that's the KLLM stuff that Sham was talking about, right? And I'm sure he's gonna, when you guys release the interview, it'll talk more about that, I assume.
Yeah. And that, by definition, creates competition towards these models. But if you are the arena and in which you have all these gladiators, these LLM models fighting, you don't really care who wins. You are the arena. You collect the fees.
I have a question to Arnie as well. We didn't really talk stock price today.
Oh yeah,
Even though the past week was pretty rough, like isolated. But I knew what you saw at the event must have been very impressive, because Arnie sold all his positions beside Palantir and went all into Palantir again. So do you want to talk about that, Arnie? Let us know your thought process going all in.
Well, I was almost all in before earnings. Obviously, in hindsight, I've been told it's not insights, but hindsight. It feels stupid not to have trimmed the position a bit after a plus 8% or so pre-earnings, but that's it. Then after earnings, I had just started a small position in Robinhood and MSCI, and then Palantir down 15%. You know what? I think this reaction is stupid. I know that what I've seen is real. Palantir is not a scam company. Actually, I see both. The product is really strong. The management and the employees are truly excited. It's like I have the same company I had before. It is growing. I'm more excited. I'm more convinced. Okay, goodbye, Robinhood. Let's go all in again.
Actually, I was also very close to purchasing. Like the last time I bought Palantir, it had a 6.
You mean you at 16? You bought?
No, at $6 was the last time I bought Palantir.
You haven't bought.
That was when I was all in Palantir.
No, but you definitely bought above $6.
No,
dude, I feel like I have screenshots from you that you bought at like $20.
No,
am I wrong?
No, I've sold at $20.
Oh no, you're right. You did sell. Yeah, no, you're right. You did sell. Yeah, you sold.
Yeah. So, but I was really close, and I probably will purchase Palantir at these levels. I need to value it again, but going off of my Q4 valuation, I would be comfortable buying here, and I don't think we've seen anything overly negative. I think we're seeing a lot of positivity, good commentary for what the future might bring. So I'm back to buying Palantir again after a big hiatus here. So it's really exciting.
Well, I think it was already in the air. Like couple of weeks ago, we were discussing, okay, but what is the real bear case? And we came up with the idea that there was no real bear case in terms of the business, some real issues, but we were aware that the valuation was not really appealing, meaning that potentially there was downside. Then we got a couple of weeks up, a couple of weeks down, but now we had essentially the perfect combo. The company is growing, is printing money, the confidence in the business, both I would say from real investors and the management is very strong. The clients are super happy, and the stock is down. So I'm excited for that.
Vince, any thoughts?
Yeah, I mean, I think that the price is very appealing at this point. I see the same thing as Arnie, that the business is doing really, really good and it's overlooked. And I think that somehow Wall Street is not looking at the forward-looking numbers as we are. So I think more good things are to come, and the growth is going to gradually speed up. Obviously, I was wrong about how fast this would happen. Yeah, I also think it's appealing at this point.
Yeah, you know, Vince, I also think I've been overly bullish on how fast it will happen.
Yeah,
But
dude, you
on
said
the-
660. You said 660.
No. Go listen back. I was right on the commercial. I just extrapolated. Anyway, I'm not talking quarters. I'm talking years here, and I think the scale up will take a bit longer. But I also feel like the efficiency will be higher. So I think the free cash flow margins I was too bearish on. I think the free cash flow margins will be higher. So it will like even itself out. It will pan out over a 10-year period. Anyway, I haven't done a full model yet, but those are my like raw thoughts. I feel like I've been too bearish on the margins and a bit too bullish on the rate of scale up.
One thing is they did buy $9 million worth of their stock at $24.77 or something. So that was weird. I don't know why they bought $9 million. Like that was so weird, dude. I don't know
That is a P in Mississippi, as they say.
No, I think what they did was they were testing the waters. Like, okay, will the market be like really bullish if we buy back some stock and show that the stock is like undervalued, or like I don't know, but
yeah, but they didn't even talk about it. Second of all, at least do 50 million, right? Don't make some weird number. Like make it in increments of 50 or even 100, right? Like be an adult about this. Not like this is just so. They were acting like me buying like 2.7 shares with my leftover $15 or whatever. Like,
yeah, I'm really curious what they were like aiming for. Like at the time when they mentioned it in the call, because I didn't look like at the presentation. I only listened to the call, and they said like we also purchased back stock. I was like, wait, what? And then the number, like my first feeling was like, well, they must have just like trying to gauge like what kind of reaction that would get, because yeah, I don't know, it felt really weird.
Well, fortunately they didn't put it in the press release.
Yeah, thank God they didn't. We bought $9 million of our stock. It's like,
whoa. But I appreciate the attempt. Some few weeks ago I actually shared the idea that I don't think at 25 or so it would have made any sense to actively purchase shares, because the valuation was not that appealing in my opinion. Yet I would have appreciated at least to start the buyback exactly to test the waters, learn how to execute them in efficient way, because the worst thing you can do is having the company that theoretically should learn how to invest in itself, essentially buying at a very high price and then not buying when the stock dips, which is what many companies actually did it. Like Meta was purchasing its shares at $300, then at bottom whereas not purchasing and then started buybacking again.
Yeah, I don't think the company is stupid. I don't think the $9 million was arbitrary. I think what you'll find out, or maybe this is just my hypothesis, so I could be completely proven wrong here, is that the company is taking some sort of percentage of something and using that as their go-to to do buybacks. I think that they've recognized that they have a steady stream of growing revenue and net income going forward. And so they, could be looking at this and say, we want to purchase back 9% or 8% of our stock from a net income basis on a quarterly basis. Or if you look at, say, the operating income piece, the adjusted operating income piece, they could say 4% of that. And we want to keep that number consistent until we decide to change that further. So I anticipate that there's something associated with that. That's how I would organize my organization. So you're still building on a net income basis or whatever, 90 to 95% of that, but you're still at least getting some of that paid in capital that you've been putting in for so long back to shareholders. And I think that, they're just going to do that on a prudent basis. I think another point that is dragging back the stock, I believe this year we'll kind of hold back at $25. I'm sure at some point we'll venture back up into the high 20s again, but I think we'll level off at the end of the year at 25, as per my last Seeking Alpha article. The thought process that I'm kind of thinking here is that they have $4 billion worth on the balance sheet, but other than purchasing SPACs in 2021 and then buying some gold and then buying some treasuries, they haven't really done anything with it and reinvested that back in. So I think the people are a little bit concerned with respect to how they're actually going to utilize this money going forward. But the thing that I would not doubt Palantir, that might just be how the street views it, but the thing that I personally do not doubt Palantir with is creating new avenues and cohorts for growth. And what I mean by that is specifically is Apollo wasn't a thing 4 or 5 years ago, right? And same thing with AIP was not a thing 4 or 5 years ago. AIPNow, all these new avenues for growth and continued revenue coming back into the company that is built on Foundry and Gotham were not available 4 or 5 years ago. And I feel like the applications of future software that they will continue to release will continue to surprise us, and they'll be at the forefront of what a real software company needs to be going into the rest of the 21st century. So that being said, I'm bullish. And I think for me, while I haven't bought much over the past year, if it did dip back into the 20s, I'd probably be actively buying. And I do have sold puts at 17 that I think I wrote for July timeframe. So if it dips below 17, I'll probably be buying.
Well, the positive side of not buybacking much means that there is still more cash at 5% yield.
4.6.
And the interesting thing is that I just realized today, we are now at a gap net income profit margin of 17%, thanks to like 5% from net interest. Like, that's massive.
If we had some analysts on the call, I'm sure they would have asked. But as for the cash pile, it's interesting. I mean, we talked about buybacks last week. Amit had to cut me off because he thought I was being too aggressive. But they have amazing interest rate on the cash, and we do know that they can't simply just go buy back stock for 4 billion, because Carp has said in previous interviews that they need to have a war chest because they are in the defense space, and they need to portray some sort of stability by having a lot of cash at hand. And that's also how they attracted like larger clients, making sure that like you can trust Palantir. Like, we're not gonna go bankrupt tomorrow. Like, look at all this cash. So I think they're always going to keep some sort of war chest. For now, it's fine. They are collecting interest rate on the cash. That's really impressive. But that interest rate will slowly trickle out, and then we're going to start to see some actual moves with the cash. So fun times ahead, interesting times ahead on that one.
All right, good stuff. Thank you, everybody, for being here. All 225 of you. This was our recap of Palantir Q1 earnings. I know the stock doesn't reflect the results, but I think all of us are thinking it's at least an interesting opportunity now, being down 20% after earnings, where we saw some really good numbers, even if all the numbers across the board weren't like amazing. There were a lot of good numbers that were there, and I think the business is moving in the right direction, and that's what we needed to see. Everyone's Twitter is in the description, so make sure to check them out on Twitter. Vince, Matt, Arnie, myself, and Amir. And we'll see you next week, and then basically 2 months left until next earnings.
One Lambo.
Which hopefully they crush so we can get a Lambo. It is interesting. I met a bunch of people at the conference. A lot of them watch Arnie and I, and a lot of these people have a lot of shares, dude. So, $1 down for them is like a lot of money. We went down $5, 25 to 20. So there were some people that lost a lot of money on paper. But they love Palantir, dude. They're so happy to be invested in the company, and they're so excited for this thing. So we'll see how it plays out. All right, that's it for us. We'll see you guys next week. Thank you all for being here, and we'll see you next Friday.
Ciao, guys.
Bye, everyone. Have a good one.